we by mistake closed our video. All right, so we were just talking about shorting that because of this divergence here and because of this low here. So no, you don't want to go long there. You want to go short here. And now you see why. Now this could pull back. I expect this is going to pull back into 2790, maybe even further. It's just that we have low volume down there. See right in here, that's where I would expect this to go. Do a little repair down there, maybe even go further and repair down here. Premium right now is not cooperating, however. As you can see, premium is moving up again. So this suggested this should be shorted for a scalp, really. And then when we came down here, this is even lower, so that needs to be tested. These lows right in here. $91.25, $91.25, $91.25. See where the premium is? So that suggested it was going to move back up. So not quite ready to turn and really come down to this ascending upper value area. Just need to be patient. Well, now we're coming down, and that's fine. That's fine. Because what we really want to do is get long. And this high here, right, that clearly indicates that we're going to be going back up. See if we can get a real nice pullback here and get into a better long position. Now we're not, I don't think we're anywhere near as low as we need to be, but that's good. So we got an automated long signal down here to ride this up. And the question is really, where is this headed? And that's a big number, 99. And we have plenty of time to get up there yet. But we want to be cautious about how the premium is forecasting the move. And as you can see right now, as we hit this new high, premium was not cooperating. It actually indicated a pullback here. And it appears as if that is what's happening at the moment. And so a set of our strategies took that short up here, and for good reason. we're struggling to get up there. But I think the overall picture is long, but there's nothing wrong with a little swing trading. So that short materialized a little bit. We're going to suspend further comments until later on this afternoon. Well, we are back now just to recap the balance of the activity for the day, our automated signals, and how the premium helped us in making proper decisions. We were expecting a long trade today, and although we had a significant pullback in the late afternoon, nevertheless, the market managed to return to its previous direction and rallied up to a high of 95.50 right before the close. It's interesting that from the standpoint of the retracement from this high to this low, when we had the big retracement this afternoon, we came right down to the 50% mark. Again, right on the money. So it's good to keep in mind what the Fibonacci retracements are, because they seem to be working of late. Now let's take a look at what the premium told us on the ride up to the high at 11 o'clock. As the market rallied and we were long, we got this little dip. All right. This was a bit of a concern, because while we should be getting higher highs as well as higher lows on the premium, as we moved through this low at 844 up to the high of 944 in that hour, that's not what the premium was doing. In fact, as you can see, really after 9 o'clock, overall, okay, the premium was moving down. And so what that generally means for us is that the move up is not going to get as high. And as a result of that, we're liable to see some divergence and a pullback. So just look at these lows. We're just going to use the averages here. Now, this new low on the premium, that's a naked bar. That price has got to get tested. It is here and then even here. And you've got divergence, as you can see here. That's on the positive side. But on the average, not so good. This should be higher, and it's not. All right. Now, it can recover from that, but all the same, that didn't look real good. Worse than that is as we moved up higher, look at where the averages dropped to here. All right. So that price area in here at 81 is now a real concern. That's a real concern, because that surely should not be as low. It should be much higher. All the same, the market continues to march up, and we come to this high, and now again we're at a lower high here. That shouldn't be the case. And finally we get another move up here, and it's just not enough. Okay, we're just not high enough on the average. But the salvation of this is that we got one bar move here at the top, which was a new high on the premium for the day. But all the same, this just it's just not the way it should be looking. So what happens next is that the market pulls back. Not surprising, because of what happened over here. And where do we pull back to? Well, we don't pull back quite as far as the real, lows of that move. I mean, that lowest move right there was 81, on the money as the market is moving lower. But now as the market moves down to these lows, this bar becomes a real concern. It's a naked bar. You see how this low corresponds with this low on the premium, 0.7, 0.6, 0.18. Yeah, we're moving lower, as we should be, but we're, instead of getting divergent, the premium is agreeing with the move, leaving us with a naked bar at that low. And this low is 81.25. So what was happening over here in terms of the low on the average, all right, which indicates, yeah, that price range isn't stable. Now we get another new low on the premium. Now we're not as low, okay, agreeable. We're not as low as we were here, but all the same, that's a naked bar, and you know that doesn't work. That spells a return to that price. So as the market begins to climb, okay, we get this move up, that's good, but now look at the high here. We're not good. We're nowhere near where we should be. And when that price is tested, oh, that's bad. So that's why we saw that big pullback on the 20th. All right, this is on the 20th. We're going to take this now forward to today, which is Friday the 22nd. And just keeping in mind that price range at around 81, watch what happens today. All right, so coming into the morning, this morning, we get a low at 8:43, low of the morning. Now, this is a naked bar, there's no doubt about it. But all the same, the premium had moved up quite a bit. So while that would normally concern me, in this case, it's not so bad because in reality, the premium has moved up quite a bit. That's not the same as this low, however. This low, we've got a lower low on the premium, and you can see the averages have really dropped off on that quick move down. Now, we were going long nevertheless, but from the standpoint of the premium, all right, this price is in the premium says we need to check that, and sure enough, that happens right over here. Now you see same price, 83.25 at the low. This is 83.50. So we test that, we're divergent here compared to here, and it's good to go. We get a nice new high on the premium here, no real concerns, and the premium is now moving up nicely. That's the way it should be moving, okay? Higher highs, higher highs, higher highs, but what about this? A little dip there. That's kind of a question. The lows here, 91.75, okay? And then as we go up further, we get another dip in here, all right? So that kind of suggests, yeah, we need to test that price. And so we wind up moving down, which gives us a great opportunity to get into a long trade right in here. Because look at the divergence. You're at a lower low here, we're at a higher low here, and good opportunity to get into a long trade. And we got a nice long signal there. Let me just show that to you quickly. So right there, the automated system kicks off a nice long trade. And we had other long trades in here as well, which we've already recorded. But as we got up to the top, let's go back to the premium and notice what's happening here. Now, looking at the slow moving average here, all right, notice where we are. Right at that turn, we're at 0.1842. And we come up here, we're higher, okay, and that's good for this, but it's not so good for the faster moving average. This is way off. This is way off. Your high over here, it's not quite the high. All right. We look at this, and then we look at that. We're way under the slow moving average, and we're not getting any kind of new high on the premium. In fact, that's a short. Okay. There's just no two ways about it. And so what does the strategy do? The strategy right here at the top starts kicking off short trades, and it doesn't stop. Look at all of these short signals. A little premature here, but then we get short again right in the top here as this thing begins to tank. Where down to? You know it, 81. So, wow, we're way up here at 90. What was it, 94? Okay, 94 and a half. And we take this thing all the way down to 81. Now let's just check these short signals for confirmation on the premium. So we already looked at this signal. Okay, that's real obvious. All right, we can see that's premium is turning. And what about here at 1120, 1129, and then again here at 1140. We'll go back to the premium. Now we don't have the signals showing up on this screen. We're just using the premium just so that we can learn how to read it. So looking at this, the overall slope of the premium, all right, premium moves up here, Spoos go a little higher here, all right, and now look at where the premium is. That's in agreement with the signal. We move up higher here, and then we're way low in here, but we've moved up a little bit higher here. So if you look at this high compared to this high and this high on the ES, that's kind of suggesting, okay, that price needs to be tested. And you see how that winds up happening over here. But as we move down here, okay, into these lows, look at what happens to the premium now. Premium moves way down, becomes divergent here. So with what you know to be happening here on the premium, going long in here would make some sense, or right in here. But look at the premium, how it drops off here. You know you need to short that up here. So let's look at what the strategy did. We've already confirmed the shorts in here, but what about the long in here? Okay, it's right around 12.15. Our long signal comes in right here. all right, on the automated side. There's a three-tick, the Spoos moved down another 3 ticks from that point before the rally resumed. But as we came up here, the short strategies kick in again. The high is at 13.11 in the afternoon, and there is where the short strategies start to really kick off again. These bars, that's just the premium. These are not signals. That's just the premium. We get another short signal in here, and then we began to kind of lose steam. So let's check between about 3:40 into 2 p.m. and notice what the premium is doing. So down here at 3:40, oh, and by the way, I should mention this. I've set up for a more clear analysis. I've put short trades on one screen and long trades on another. So that's why you're not seeing both signals on the same screen. I've got them separated to make it easier to analyze what's happening. So as we come down, we wind up coming right down to that area around 81 as we mentioned. We get a new low on the premium here. So that tells you, okay, we got to test that. It doesn't take long for that to happen. All right. And we become divergent on the premium here, but on the average, it's not good. That price range in here is not good. And so we keep on kicking back into 82 and a quarter, finally down there to 82 even. And finally, you begin to see more divergence on the premium in here. Okay, so that's the question is, did we get any long signals in here? All right, we wouldn't want to take any long signals. Well, we might want to take one here from the standpoint of the average, but that big bar down would say no. This doesn't look good from the standpoint of the averages. And the long moving average doesn't really turn until here, and so we come back down, catch a couple of lower bars on the ES. And so from that standpoint, this is a little safer to get in. So the question is, just before 2 p.m., what did the strategy do? You knew that by now, right in here, at 2 p.m., or for that matter, even here, okay, at 13:54. Going long in here would have made sense. Unfortunately, the only long set of trades we had was right in here. So you'd had to pull off a manual trade in here in order to get long. But as we had set up the strategy, and let me show you what we do here. Now, this is all based upon personal discretion. These are just moving averages. That's all they are. But I use them based upon how I analyze the market. I use them to try to prevent the strategy from doing what I don't want it to do. So what I did is, as I looked for the long trade at the earlier part of the day, all right, let's get the open. Yeah, okay, so we're right in here. So at that particular time, I had set up the strategy to use this moving average as the basis for my long trade. Okay. And then as the market started coming up to catch these long trades, I switched to this moving average, okay? And to show you what that is, okay, this is what the moving averages are set to. So I was using the 1,000, the length to 1,000 for the initial long trades. Then I had to switch to 500 because during that period, this was short and I wanted to be long. So I had to switch to 500. And then after the move up, we took off and we let the strategy alone. And this was set, the long strategy was set using the 500, which by now had gone short. Okay, it went short. And so while that was correct, from this standpoint, what we had really done is look for the short trade up in here, which we did get. And I'm not going to go into the details on how that was was handled. But what was interesting is that this moving average, of course, turned, and so the long strategy started going short on this way back up. So let me show you that. So there's the long trades, and then here comes the shorts, which we didn't want to be short. Although that's not bad. I mean, it did pull back a bit, but these short trades, that didn't make any sense. Why? Well, take a look at the premium. All right, just before the close, okay, 1455, 1456. All right. See what's happening? The premium just goes out of sight. All of these are higher highs on the premium. So it didn't really make much sense. And there would be no reason to short that. That's a new high. Now here, that made some sense. We're at a lower high here. There's expectation of a pullback. All right. So from a short standpoint, did we get a short there? Yes, right on the money. Nice short there. But over here, as we said, no, didn't make any sense. We didn't get any long trades though, but you could see how the premium is behaving there. Oh yeah, we definitely want to be long in there. Okay. So that's the wrap up. Didn't quite make it all the way up to 99, but rest assured we probably will. Now, is there anything here that really concerns us going into Monday? No. Yeah, I don't see anything terrible that I'm terribly concerned with that would suggest a major pullback on Monday. No, we should finally make it up there to that target that we've been talking about all week. So that's the wrap up. Strategy did quite well, and if you learn how to read the premium, you're going to do well too. But you got to do that because the strategy does not read the premium. You've got to read that manually because there's we just haven't found out a routine that will accurately read the premium the way it should be read. I have not been able to automate that process. We can automate the minor decisions without any issue, so that when the premium is in agreement with the direction of the trade, in all probability, you'll get a signal. We haven't coded, of course, every conceivable opportunity, as you've just saw down here. Yeah, I'd have gone long in here, or in there. I wouldn't have gone long there though. No. And I wouldn't have gone long there. No. I wouldn't have gone long at all in here. The only place I would have gone long is here. So, oh, I would have gone long there if I wasn't already. But in any case, that's what we have to report to you. I'm Rod Kusin and Spooman for Risk.